theme of 2014 has been the big shock in terms of lower crude prices. As analysts just told us a while back, crude prices are falling because of the supply glut and not so much because there is lower demand. But let's find out from Seth Kleinman, the head of Energy Strategy of Citigroup, on what really is the future for crude now. Seth, hi, good morning, and thank you for joining in. How surprised are you by the big fall that we saw in crude? And the last time when we spoke to you, you said that Brent could fall to as low as $50 per barrel. That's not too far. How low do you think the prices can go from here?
Recently, the past few weeks, it's just been this free fall in the oil market. And now we're down at this level that I think that you need to ask yourself, because people are still bearish on oil. But I think you need to remember, cast your mind back to 2008, 2009, when the world really did feel like it was coming to an end. And we briefly went below $40 in the oil market. I mean, do the oil markets now look as bad as they did then? No, they really don't. I mean, demand is doing okay. What has happened here is a supply story and a surprise move by OPEC where they kind of got out of the way. So we think that oil prices are in the process of finding a bottom down here. I mean, it's notable that the market doesn't seem to care. Libya's descending into total chaos, into total civil war. Nobody cares. Saudi Arabia marginally increasing some of its prices to Asia. Nobody cares. I think the world's a little too bearish on oil right now, and I think we'll be finding a bottom in the pretty near future.
Hi, Seth. So what do you think, say, going ahead into the first half of calendar year 2015, or even perhaps the second half, do you think that there are high chances that crude can bounce back to that $70, $80 per barrel mark?
We certainly think that the first half of the year is going to be weaker than the second half of the year for multiple reasons. Part of that is that on the U.S. Gulf Coast, which is a big, important center for the crude markets, a lot of new pipelines have just started to come online, and they're going to be bringing an awful lot of Canadian crude down to the U.S. Gulf Coast in significant volumes. That's going to be a big weight for the market. Plus, what we've seen is Russia changed its tax regime. This resulted in less oil flowing out of Russia in December and a lot more in January. So there's multiple factors that we think are going to weigh on the first half of the year. But by the second half of the year, this low price environment should start the process of cleaning up the market. You should start to see a pullback on production, on supply, particularly in North America, but you could start to see declines kicking in elsewhere. And we think you'll see a little bit of a boost to demand thanks to the low price environment. You're already seeing much better data for U.S. car sales. As the impact of the oil price filters through the global economy, we think you'll see a slight pickup in demand.
Okay, so slight pickup in demand is what you're expecting. But in your assessment, how has the world changed in the last 6 months due to the fall in crude prices? We in India believe that since we are importers, that we would benefit a lot going ahead. But in your interaction with many investors around the world, how has the assessment been?
So I think that the initial reaction to the lower oil price was very simple on the part of investors. It was buy airlines, buy consuming industries that benefit from a lower oil price. I think now, as the time has gone on and the oil price has fallen further, you're starting to see a much deeper thought and reflection about what this really means. And I think that one of the things that you've seen is investors starting to question how much of the U.S. economic strength was a result of the extremely strong energy industry. I think there's still an open question on that. If you look at where the job gains since the Great Recession, since 2008, 2009, where the job gains have been in the various states, they've tended to be states with significant energy and shale industries. So I think that that's one question mark that has arisen, and I think that helps explain, for example, why gold prices and equity markets why gold prices have done well and equity markets have sort of sputtered a little bit. But it's obvious, it's clearly true that the lower oil price is a significant economic boost for the global economy as a whole, but most particularly for countries like India, like China, big, short, energy importing countries. These are the prime beneficiaries of these lower oil prices. And the big losers are the heavily levered, exporters that are in precarious financial situations, the Venezuelans, the Irans, the Russias. These are clearly the big losers, but India is definitely on the winning list here.
Okay. Is there any particular data point or event to watch in order to map crude prices going ahead?
Sure. Well, one thing to watch is OSPs. That's a phrase that might not mean that much to everybody now, but it's going to become, I think, a much more current phrase. It's the official sales price, and it's how the Saudis and the rest of OPEC set the prices for their crude. Most crude is actually traded as a differential to a regional benchmark. That's where the OSP, the official sales price, is. That's one thing to watch, is the official sales prices, the prices at which the Saudis and the rest of OPEC are selling their crude. They've cut prices very significantly starting back in September. That's what really crashed the market. So if they raise them, then that would be indicative that there's been a change of philosophy within OPEC, within Saudi Arabia. Another complicated data point to watch is Saudi succession. There's a lot of rumors swirling around the market right now that the Saudi king is in very poor health. And if we do move into an area where you need to see who are the next rulers of Saudi Arabia, that could come with a change of policy regarding the oil markets. Obviously, oil market policy is a very important factor for Saudi decision-making here. So if you see succession in Saudi Arabia and you see a change of attitude in Saudi Arabia with the new rulers taking a less aggressive view of the oil market, then I think you could see things change. Would that be enough to take us back to $100? No. I think the era of $100 oil is over. But could it take us back to north of 60? Yes, I think quite possibly.
When you say that $100 per barrel is not coming back, how long do you think that could be for? I mean, have you ruled it out for the next 4 to 5 years at least?
Well, 4 or 5 years is a long time in the oil markets, but certainly for the next 2, 3, 4 years. And frankly, I think, in fact, I'm going to go out on a limb and say for the next forever, essentially. The reason why it's hard to see that $100 can ever really come back to the oil markets is because of the economics of shale. And to your earlier question, in terms of the data points to watch, you want to see is U.S. shale production starting to roll over? Is it starting to suffer because of the lower oil prices? The problem with charting a path back to $100 is once you get to 70, once you get to $70, basically all of that U.S. shale starts to come back again. There's a question mark over whether it can work at 50 or even 60. It can definitely work at 70. So once you get to 70, the U.S. shale industry comes back in full-fledged glory, and I just don't see a path. Once you've got that kind of growth, and you will then see a path to shale going international, spreading beyond North America. Once that's become a reality, then I don't see how you get to $100 unless you have sort of some catastrophic supply disruption, a terrorist takeover of Saudi Arabia or something, really that big, bold, and terrible.
Okay, Seth, do you track the offshore drilling space? And if you do, have you seen the day rates cracking at all?
Yeah, I don't really talk about companies. I mean, I do actually look at that stuff, but I shouldn't really talk about it on camera, sorry.
Okay. Finally then, have you at all heard of any emergency OPEC meet which there could possibly be? For now, the OPEC has said that they are not going to cut production, but anything that you've heard?
No, there's been no plausible talk of an emergency OPEC meeting. And also I think that really looking for that is possibly misleading, because the key driver of this change in OPEC's philosophy was Saudi Arabia. If OPEC's philosophy is going to change, it's going to come from Saudi Arabia, and Saudi Arabia doesn't need the rest of OPEC to go along with it or not. If they change their view, then they can just start raising their prices, and then the game has changed. There doesn't need to be an emergency OPEC meeting in Vienna for a change of philosophy to occur here.
All right, we'll leave it at that note. Thanks, Seth Kleinman, for giving us your view. So that's the word coming in on crude. Perhaps it has found a bottom at these levels. Crude demand is absolutely fine. So, of course, $100 a barrel is something that we won't see for a long time, but perhaps no more sell-off from here on.